دوستان سلام، من امیر محمدی پور هستم، مدرس و معامله‌گر از آکادمی تریدتاک. با اپیزود هفتم منتورشیپ ICT در خدمتتون هستیم. دو تا نکته رو در رابطه با ویدیو باید خدمتتون عرض کنم. اول اینکه قسمت هایی که در پرانتز میبینید توضیحات بنده هستش. دلیلش هم اینه که ویدیوهای مایکل متاسفانه در اکثر موارد از پیوستگی ساختاری در ارائه محتوا برخوردار نیست و دقیقاً به همین دلیل ما مجبوریم توضیحات اضافه رو به این صورت خدمتتون ارائه کنیم تا مطمئن بشیم در جریان مفاهیم اصلی ویدیو قرار میگیرید. نکته بعدی اما در رابطه با اپیزود هفتم هستش. در ابتدای ویدیو ICT یه تحلیلی در رابطه با نگاهش در تایم فریم روزانه ارائه میکنه که میتونه خیلی الهام بخش باشه. نکات مهم دیگه ویدیو هم در رابطه با نحوه استفاده از ستاپ یونیکورنه که توی تریدتاک در رابطه باهاش یه پست گذاشته بودم، هم توی کانال تلگرام و هم توی توییتر. آدرسش هم میتونید اینجا ببینید و البته نگاهی که به ساعتهای مهم وجود داره در کنار تحلیل مولتی تایم فریم از نکات حائز اهمیت این ویدیوه. خب دیگه بیشتر از این وقتتون رو نمیگیرم، امیدوارم که مفید واقع بشه.
All right, folks, welcome back. This is our index futures review. And obviously you can see we had a pretty dynamic day today. I'm going to take your attention to this down close candle right here, and this high, and this higher high. This pattern right here, from high, low, higher high, this is my bearish breaker. Okay, so we can see how inside of this imbalance, you can use that, yes. I'm looking at this breaker also. So why didn't I call any higher level than 39.69 today? This is the very reason why. Now, could it have gone higher? Absolutely. Did I hold to 39.69? No, I got stopped out prematurely and I had to get away from the computers and my attention had to be elsewhere. So long story short, I get stopped out. It is what it is. But I managed something for you today. Walk you through it minute by minute on Twitter. And you're welcome to go through the tweets on January 9th, 2023. They're all there. Nothing edited, nothing deleted. Okay. So contrast this breaker where the market goes up into that, which is mean threshold. Half of an order block is mean threshold. Half of an imbalance, like this here to here, that is consequent encroachment. So there's several things there. Notice that. Half of this range approximately is about right here. And then you have half of the breaker here, right there. Okay. Add to that, once we drop down to the hourly chart, the levels I gave you this morning before the market started gyrating. Okay. Now, some of you are like, okay, that's great and all, but what's it going to do next? I'm watching how we react on this candle here. Okay, so this open on this candle here, I'm watching that. That is a potential order block that I like. We'll see if it wants to get down to that and show some kind of respect there. But if it doesn't, this one here, mean threshold of that candle right there is the last line in the sand. If it fails to hold price higher, then we're going to most likely attack the sell side here. It would need to get back above half of this wick on a closing basis for me to feel bullish again. Okay, so it makes it real short and sweet. And we're going to drop down to the hourly. Right here's hourly, even the S&P. And here's our daily volume imbalance. And we have a fair value gap right there. So we have institutional order flow entry drill right there, going down just a little bit into the gap. Then rallying up to our levels that I shared on Twitter this morning. We have a gap opening here. So it's a new week gap opening. That we'll look at that in lower time frames. And also notice how we found some support right at the top of that old daily volume imbalance. Pretty cool, isn't it? This is exactly what you would expect to see from support and resistance, but it just simply never works that good when you try to draw highs and lows and diagonal support and resistance that doesn't exist. I know some of you get mad when I say that, but the algorithm has no respect for that kind of thing. Okay, but let's drop into, let's actually go back a little bit. I want to show you where I anchored these levels right there. Okay, so this area right here is where I have the high of 39.69 and the low of 39.59. This candle's high. You're looking at that value right there. That candle's high, 39.50.5, and this candle's low, 39.69, which is this level here. Watch. That candle's low, 39.69, and that's what you see those levels here. So what's happened was the market trades down, comes back up, trades down one single pass, comes up, stops there, goes lower. So it left an inefficiency here. So that's a fair value gap. What kind of fair value gap is that? A SIBI. Sell side imbalance, buy side inefficiency. Okay, so it's going to want to see a move back up into it. And we see that actually occur today. Beautiful. Look at the bodies of the candles respecting the high of that fair value gap. Isn't that beautiful? Like that, to me, never grows old. It's such a beautiful sight to see. And when you see something perform as you would expect it to, and it's been codified the same way for years, it just keeps going over and over and over again. The same logic is always unfolding. And you keep worrying about whether it's going to fail or stop working. Keep trading it until it stops working. Let's do it that way. Okay. For all of you have this concern that, what I'm teaching is going to make the markets change or stop working or stop following it, just keep trading it until it no longer works. Okay. Just do that and you'll be fine. Now, one of the things I'm concerned about is if we came up here, and it may be a little too early to tell, I don't know, but if we lose this fair value gap, okay, because that's the next one down here, between this low and this high, equilibrium. Let me show you what I'm referring to now. Equilibrium's here. So below equilibrium for a discount, we have this here. Okay, so if we get below this, man, look at all the liquidity below that low, this low, this low. There's a ton of money just sitting right there at 38.18 and to 38 even. Like enormous amount of liquidity down here. So I'm watching this here with the expectation that if this gives way and it goes down below, maybe comes back up, acts as resistance, it doesn't need to do that. But if it did something like that, then I would be looking for a nice run down here. But I'm studying it, watching, see what we get from here. But let's flesh this out a little bit more. We have a little bit of a fair value gap in here. And we trade down to that. You'll see that when we drop down to 15-minute time frame, which we're going to do right now. And this is the level and levels that I showed you today in Twitter. And if you're not a subscriber to my Twitter feed, I know some of you are like, oh, I'm not going to get on Twitter. I'm not going to do it. Okay, well, you're not going to be informed. Okay. I mean, that's what I use to alert everyone. It's a nice function for folks that don't follow me with English. If you're outside of the country or outside my native tongue in English, that is easily fixed by using Twitter because you can click the translate thing on each one of my tweets and it'll translate it for you. It's also real time, just like me giving you a text message right from my phone to your phone. I'm going to be worrying you all day long during the New York session. Okay, in the morning hours between roughly 8:30 and to 10 o'clock. Okay, I'll probably worry you to death, with lots of alerts and such. But if you want to learn how to do it and you want to have a minute by minute until we start on the February 7th live streams, this is the way I'm going to do it. Okay, so if I'm tweeting too much or I'm too busy, just turn your notifications off and look at it after the fact. Okay, I block people that complain because I'm giving you my time for free. Okay, and if you're going to give me your criticisms and that you don't appreciate being, alerted that many times, then unsubscribe and go follow someone else. I really don't. I don't mind sending you on your way if you're going to be disrespectful. So the low and the high on that hourly SIBI, that fair value gap, here it is here and here. Okay. Here we have that hourly fair value gap and the top of that daily volume imbalance, that right here, this orange shaded area. That's what we were looking for as an upside objective last week, and it got to it, and then we found some support there. Okay, and then the market rallies, trades up into the low end objective. I was not a participant to the 59 level. I rounded it down to 59 during the tweets, so you'll see that, and then even on my chart, it's set to 39.59.00 level because I was roughly doing it with my eye. But this is actually the measurement between the high and the low of that fair value gap on the hourly chart. So the mid-range of that is consequent encouragement, and it's 39.59 3/4. So that way you know that's the actual level. Once it gets to the top of the hourly fair value gap, at noontime, lunch has a market reversal. Small little gap in here. Trades up into that beautifully. Sells off. Here we have a SIBI. Market trades right back up into the SIBI. Leave some of it open, which is what you would like to see if it's going to be heavy and weak. The market trades lower into the daily volume imbalance. Down into our new week gap opening. I mentioned this a little premature, and I'll tell you the reason why I did that later on. And traded down into this imbalance, and finally, while we're doing our discussion here, it's trading down into that. So just a beautiful breakdown, crazy meltdown on S&P. To me, I think this is noteworthy. I think we probably, most likely, and I'm prepared to be wrong, but we most likely put the high of the weekend probably already. And it'll be interesting to see how we trade now going forward. That's my opinion. Don't bet the farm on it, but that's what I'm thinking we've seen so far. And let's go down to a market 15-minute chart. Let's go to a 5-minute. All right, so now we're going to get a little bit more busier on the chart. Some of these things are going to be a little clustered up, and I apologize, but there's been a lot of things that was being discussed today. And we have sell side below these relative equal lows here. The market drops down. This candle here is 805. There really wasn't any news driver today, so you have to wait until 9:30 opening. Okay, so I tweeted that, said let's just relax and let things pan out like they would. And I drew your attention to a breaker on the 1-minute chart and 5-minute chart. And the range on the 5-minute candle right here at the 735 candle. That's what I wanted you to draw out in time, extending that out. And it was a little bit choppy. It took out the sell side here, then it took out the buy side here, traded down to the order block. And I mentioned this also on Twitter, so that way you can see that one here. And then we were consolidating around inside the breaker, which is exactly where I told you to take your rectangle on the 5-minute chart and extend it out in time. And then we went down, wicked through at 9:30 open, took out the sell side here, traded into an order block right there. Now, I did not mention this much, okay, because it was all happening real fast. And I got disoriented because I was trying to do the folks a favor that cannot trade ES and have to use the US 500. So I was toggling back and forth with my charts, looking at one chart with the US 500 and looking at the chart for ES, which is the market I actually trade. And I got disoriented, back and forth looking at it because like, what? So I said, okay, note the new week opening gap down here. When we went down here like this, I said, okay, note that. And that was an error on my part because you can see it in my tweets where I mentioned right when they're going down like this and coming back off of it, I'm highlighting this because I thought I saw something in the US 500, but was referring to it as if it were this chart here, ES for S&P 500 futures. The prices are going to be slightly different. Okay, if you're comparing ES and the US 500 chart. Now look at the US 500 chart before I close this one out. But the market reversed in here, and I said, okay, we're back inside the breaker. I said, return your attention back to 39.50 up here when we were in here. And go back and look at the tweets, and you'll see that's the case. It rallies up, and then we took out this short-term high, and I said, okay, when you get to your fair value gap, which we'll see right in here when we drop into it, 1 minute chart. Let's go right into that because this is already getting long-winded. It's okay, ICT. We like the long ones. And other folks, you're making videos too long. We could have done this in 5 minutes. You could have done this video in 30 seconds, ICT. I'd love to see you do it. Do it all live, mark it up like this, and then come back and explain it in 30 seconds where it makes sense, where it's useful, not just, this is what it did. All right, so this is your 1 minute chart. So we had sell side below here, wicked down through it, came back above, came back down to the order block here on the, I believe that was the 8 o'clock candle. Let's see. Yeah, 8 o'clock candle. So we found some support there, watch and consolidating. And I mentioned on Twitter that we would likely rally higher and reach up into this short-term high here. And then we got 12 handles of a run, 10 to 12 handles. That's okay. You would say right now, this is a partial. You would mark that as a screenshot. That way you can see what it looks like. So from here to here, that's a bread and butter setup. Then we came back down. And this is the range I told you to drag out, cross over your 1 and 5 minute charts. That's your bullish breaker. The market wicks down at 9:30, open, takes out the sell side here, then comes back inside the breaker. So I switched gears and tweeted, say, take your attention back to 39.50, and then it rallies up. And then right in here, I mentioned that this candle right there, you'll see that tweet at 9:45's candle, you'll see a fair value gap. And it just was engaged here. And look for it to rally up to 39.50, and it rallies up. Then we have a small little gap here. I don't believe I mentioned anything about that at the time. We were just watching price. And then it rallies up. And I mentioned, okay, if we go through 39.50, have 39.59 noted on your chart, which is half of the hourly imbalance. Here's the high of it. Here's the low. And I know some of you that are brand new, this is like flying right over your head. But I promise, if you keep showing up every day, it will start to make sense. Like anything else, it takes time. Repetition builds understanding. And even if it's boring or if it feels like it's complicated right now, I promise you, it gets easier. It just looks very, very busy, especially when you start seeing me annotate it live in February. So you'll see me doing this stuff live, not just in a static chart. But I'm doing this that way I'm not rusty. I don't want to spend 2.5 months not looking at price and start doing live streams. Okay, I want to be right in there, getting close to the marketplace, and that's why I'm doing what I'm doing. Plus, I'm engaging you to look in your own charts. So anyway, with fair value gap, we trade down into it here, rallies up, cleans up the relative equal highs. I took a partial. Oh, I forgot. I know some of you like to see these proofs. Okay, look over here. Do you see any arrows popping up? No. Okay, and we're gonna take it over here, and there they are. Here's the arrows. Okay, see them? So inside this fair value gap, I'm buying these candles. Actually, right above the 39.50 level. After, okay, notice this. Go look at the times. Okay, this time here is 9:59. I am posting tweets talking about how this would be a partial when it went here. I have to wait before I do my exit because I don't want to be accused of pumping and dumping. Okay, I'm not running anything like that here. So if I tweet something, I have to do whatever I said after I tweet it. Not, I'm going to get out of the marketplace and then I'll tell you should get out of the marketplace. That's unethical. I wouldn't do anything like that. And buying it. I'm calling it before I do it. Then I'm engaging it. So my entries are going to be slightly off. They're going to be a little bit early, sometimes a little bit later than my ideal, because I'm giving you a tweet in advance about what I'm expecting. But it's always going to be after I tweet. So it's not something I'm trying to prepare a big move because all of you are following me and your belief is you're going to push the market. I think that's nonsense. Okay. It's nonsense. So first of all, the market doesn't work like that. I'm not going to push the S&P market around, 20, 30 handles with people following me on Twitter. That's not going to happen. So, but to combat the people that's going to be saying this, because it's no doubt going to happen, because they say all kinds of things about me, terrible things that aren't even true. But you're seeing now that there's truth behind everything I'm saying about the algorithm, the fact that I know it like the back of my hand, and it repeats. You can learn it. It's a transferable language. So it runs up and it allows me to get out here above the relative equal highs. And you can see that here at 39.56.5. So one full handle above this level here. And then I put a stop loss in right below the high end of that fair value gap because I didn't want to be babysitting it on my phone. I couldn't keep track of it because I was going to be away from the screens. And I just put the stop loss there, told everybody, I said it's either going to hit my limit, which I had sitting at 39.59 even, or stop me out. And it stopped me out. And then right at my stop, which I made public, isn't that interesting? It rallies all the way up to the high end at 39.69 1/4, and just a little bit above it. Relative equal highs are formed. Then it breaks down, shift in market structure, breaks lower, fair value gap, shift in market structure, rallies up, sells off. Half the imbalance from here to here, that's consequent encroachment, is accumulating short positions. Failure to get there, that's a sell. Right there, that candle right there, that's a sell. Boom. And it just keeps on melting. Consolidation going into the latter portions of the late afternoon, and then bang. Just a beautiful meltdown. And I realize this is still up here. Apologize. And there we are. Just a wonderful, wonderful day. Technically, just beautiful. And all of this here is a market maker sell model. So we have a consolidation. What's below the consolidation? Sell side liquidity. We rally up, buying inside of a breaker. See, you all think it's just, you got to wait for it to come back up and then buy it right there. Yeah, that's the infantile approach to doing it. But if you know directional bias, you know the next draw on liquidity, which was going to be this level up here, which I shared a tweet and saying this is where we would be. Then we have a fair value gap inside of a larger 5-minute breaker. It's obvious. It wants to go higher. So you want to accumulate like smart money does and buy it while it's inside the breaker. And then when it expands, you know you're on side. You don't need to wait for the breakout like retail. I don't do that. I do not trade like that. I know where it's going to break out before it's going to break out. And then I can trade inside that consolidation right in here. And keying up on what? Let me take that off. You can see that fair value gap right there. Let me take this off. You can see that little imbalance. Let me take the arrows off. From this candle's high, that candle's low right in here. It trades down to consequent encroachment there. Perfect. And inside of this up close candle, which is what? Bullish breaker. From low to high to lower low, right inside this range here, that's where that fair value gap happens. If you're bullish and you have that right there, folks, is a unicorn. It is such a beautiful, beautiful. Hear that? That's my excitement. That's how I'm pounding my hand here. I'm telling you, that is one of the strongest algorithmic entry patterns you can ever have, especially if you have just taken out sell side liquidity at the opening price or opening on 9:30, and you see that happening here. That's why I'm not afraid of entering here. But what if it comes back down here? It's not going to. It's not going to. It's just like a launching pad right here, and then it leaves it. And then every little imbalance in here, you just keep adding to it and waiting for it to go up. But unfortunately, I couldn't babysit it. I put the stop loss there, made it public. They tagged it, and then rallied on up to where I was expecting it to go. And then later on in the day, it hit the objective I told you to take your attention to, the new weekly open gap here. And then the coup de grace was our imbalance down here, which it just beautifully laid itself right down inside of it. So my bias for the rest of the week will be looking and favoring shorts. Unless we get through half of today's wick on the daily chart, I'm bearish. All right, so I almost tried to run out of here before I did the US 500. This is the hourly chart. And this is one of the reasons why I got disoriented looking at this market, because it's easy for me to lose track of where I'm at if I'm looking at different markets all the time. And that's why we will not be doing Forex and bonds and crude oil and gold. And I'm not having it your way mentorship, on the live streams. I'm literally going to be looking at one market. I'll give you a markup on what I think may happen, like I did this morning with the US 500. And you're just going to have to watch this yourself, because I literally lost my train of thought today with this. And I know some of you are like, oh, that doesn't make sense. I should be able to do a lot of things. Okay, I should be able to leap tall buildings and stop bullets and by holding my hand out. I should be able to do a lot of stuff according to all of you. But I'm not a superhero. Okay, I'm not your superhero. I'm not the world savior. I'm not the Forex Jesus. Okay, I'm literally trying to do the best I can with focusing on what it is that's happening real time, explaining it before it happens, and then trying to stay focused so I can do it well. And I don't want to dilute my attention. And today it happened. Like I already know if I look at anything beyond just one market, it's going to be problematic for me. And I don't want to be frustrated with it. So we're going to do it the way I want to do it. But looking at the US 500, you can see the prices don't line up because they're not the futures market. It's a CFD. So it's going to be a little spotty. It's going to act like, many times like the dollar index, where it's muddy looking sometimes. It won't be perfect like you would expect the euro and the pound and the Aussie dollar, those types of pairs where they're a little bit more liquid. This is pretty much moving in concert with what the futures contract for ES did, but it isn't going to be identical. Okay, for instance, the high end and the low end of that hourly fair value gap, which if we scrub back here, you can see the anchor points for it. They're really nice, but we trade above it, well beyond it on the CFD versus the futures contract. But we ultimately see the market trade here like this. So if we drop down to 15-minute time frame, this is what I shared today on Twitter. This chart, just like this. All these levels. And we ultimately did what? Ran up outside the range that I was looking for ES. And then it broke down and traded down into the lower objectives. So I'm not going to sit here and try to convince you, because you're going to see a lot of this year. But my expectation was I wanted to see it go up into the hourly fair value gap here. It could have wicked through it like this, not like this. This is something that completely outside of the expectation I had for ES, which is why you don't see it there. But the CFD on US 500, which is what we're looking at over here, that's the symbol, okay? This is grossly out of line with what I had expected in the ES. So the measure of precision is going to be skewed when we compare and contrast ES versus this here. Generally, they will move in the direction the same. but the levels of precision and the entry points are going to be slightly off. And that's going to, I already know that it's going to frustrate many of you. And I can see the complaints already coming in. Like, I made this for you. Okay. I didn't do anything with US 500. I'm trying to do whatever I can to help those individuals that can't trade the ES futures contract. But if I were you, okay, it would be a good investment for you just to buy the live data, which is extremely cheap on TradingView. And I do not have an affiliation with them. They do not give me any kickbacks. I have no business relationship, partnership, nothing with anybody, not a broker, not a funded account, nothing. I have no business association with anybody. I'm telling you, it's worth your while to invest and get live data for ES and NQ futures markets. That way you can spend this year with me, learn how to do this, and just simply take that information and apply it to this if you can't trade the ES, if you're outside the States. And you want to use your MT4 brokers or whatever. All of the things I'm going to teach you work, just the levels aren't going to be exactly the same. That way it'll save you the insanity and being frustrated why it doesn't line up. Because I'm not going to be spending every other day answering, well, my chart looks different to your. We should already be past all that. Your chart, if you're looking at ES, is 10 minutes late or behind because I'm looking at real-time data. So you're going to have to avail yourself a certain resource, which in my mind is cheap. You're not paying me. You just have to pay for the data. And if you had a broker and you're trading with ES, you're paying for the data there too. Okay, so there's no escaping it. You got to do it some way. But I know some of you are spoiled with Forex because you can just pull up a chart and it shows it real time and it's free. Problem is sometimes Forex isn't going to be a market to be playing in. And that's why, I'm trying to broaden your horizons, and I'm returning back to my roots with trading futures. Last bit of business, and I'm going to close this one up. All right, so this young man here is one of my students. I'm not paying him, and he doesn't get anything from me except for the fact that I'm giving him a nod publicly. I have a lot of funded students all around the world, different walks of life, and I have a lot of privately funded with their own money students that are doing exceptionally well. A lot of folks that are under my tutelage don't like to have the attention drawn on them because I'm very polarizing. And they know that the people that don't like me are most likely going to spread the hate and vitriol towards them as well. And that's unfortunate, but it comes with the territory. This industry is extremely cutthroat. It's extremely complex, and the competition sometimes likes to play dirty, okay? And they think that they can talk about you or your family and try to fill the internet full of lies and things. And then you have to either ignore it or just do you, like I'm doing me, and I'm proving I can do this stuff. And it's going to be the moniker I say all the time, every week, every day, and it won't stop. Well, this young man here looked past all of that stuff that's always followed me along over the time I've been on the internet since, well, he wasn't alive during the 90s when I was on America Online. Clearly, he's a young man. But he took it upon himself to get in there and learn how to do it. Looked at the mentorship lessons, endured all the adversities, and didn't listen to everybody else saying, you can't do this, or this is fake, or this is that. This one's a scammer. He still delivers pizza. All that kind of stuff. This young man was able to take out by his own efforts. I did not coach him into buying and selling any specific thing. He just did it all by himself and was able to withdraw over $250,000 through several prop firms. So openly and publicly, this is the highest earner through funded account trading of all my students that at least have made themselves known to me. I have a lot of folks out there that's made big money. Okay, some of them are six figures, 80,000, 50,000, 60,000. They have done those things, and you can see their withdrawals, you can see their certificates, and some of them are being interviewed from the actual companies. This young man was interviewed recently by the Funded Trader, and I have no affiliation with any of these companies. So I'm not saying you should go to any one of them. That's why I don't talk about it specifically, but this young man has shown himself to be able to do it. And let's be honest, folks, $250,000 is $250,000. And I'm very proud of him. I'm proud of his efforts. I'm proud that he stuck with it and looked past all of the things that people say about me or my concepts, or just make up all kinds of lies and things, because they don't want you to succeed. That's just the bottom line. Okay. And they know if you listen to me and follow along and you'll learn how to do this, you will never fall victim to their black box stuff, their retail rehashed things that are just simply nonsense. Okay. $250,000, folks. That's not demo. Okay. That's not market replay. This is a young man that has taken out real money, and the companies are, diverse. They're not just one company. So you can follow this young man here on Twitter, and I think he has a ever-growing social media platform that he's trying to build up. I'm not certain if he does anything on YouTube or not, but I know he does. I don't do Instagram, but here's his Instagram. But this is his handle on Twitter. So if you want to follow him, he's trying to make an attempt to grow himself. But if he's doing things like this consistently and doesn't get excited and lose his mind about it, I think he's going to be somebody to watch in the future. And it's been my pleasure and honor to have a very small part in guiding this young man. And like I said, there's a lot of these types of folks in my fold. They just simply don't want to come out there. This is not to ask all of you to come out there. Okay. I'm not trying to do this, for everybody, because if you're able to do this, you will be seen. People will take recognition of you and they'll see it. Okay. And there's nobody can talk this down. There's no way anyone can look at this young man and what he's been able to do, and you're probably looking at this like, what's the deal? But he has done several things with funded accounts and things, and I personally don't understand it all, because I have never done a funded account. I've never done any of those types of things, but this is the tweet I was looking for. See, these are all his payouts and the things that he's done over the course of his journey with all this content. And to me, I think it's fabulous. I think it's amazing to see something like that. Hi, woman trader. She's probably thinking, "Oh, my name's up here." So the topic was this young man last night. My wife and I, my kids, we were all talking about him, and I think that it's just a wonderful position for me as a person that came up from nothing, like nothing. I didn't come from money, and to see a young man like this, carve out returns like this is just very, very inspiring. And I know that some of you would like to see this, and it'll encourage you, because the folks that don't like what we do, the folks that don't like me, they're not going to like this. Okay. Because it's something that, they can't knock it. And when you make your own results, okay, and I have students that are making 10,000 and 5,000, 20,000, 15,000. When that happens for you, there's no one out there, not your friends, not your family, not your coworkers, nobody on the internet, no other influencer or clout chaser or competitive, other educator type person out there that's just spending too much time trying to well up drama and not build their own brand up, trying to tear someone else down. When you have this much evidence proving that there's people all over the world using the very things that you're trying to learn right now, and they're making real money, they're doing it with themselves, doing it exactly how I taught it. To me, that's undeniable proof. That's proof. And if I was being honest with you, I would love if all of my students would come out here and do like this young man's doing, because I have some pretty heavy hitters that are doing extremely well. But they all know that social media being what it is, it's very toxic sometimes. And I have a cloud that follows me all around because here I am, I'm doing everything for free. I'm teaching Forex. I'm teaching stock index futures. I'm teaching stocks. I'm teaching everything for free. And people all around the world are taking the information and now they're making real money with it. So how are these competitors going to view me? Any chance they have to say something negative about me or my students or their opinion of you wasting your time, they're going to try to do that. They're going to create sock puppet accounts. They're going to encourage their members to go out and try to just well up all kinds of nonsense just to make you doubt doing what this young man and many of them out there on Twitter and in my own personal mentorship group. People out there are actually doing well with this. Think about it, folks. What would $250,000 do for you? What would it do for you as an individual? Any age bracket, I don't care where you are in terms of life. If you're young or old, middle-aged, $250,000, folks, is $250,000. That's life-changing. And for some of you that are in certain parts of the country, a $250,000 investment return like this on something that you learned from YouTube, you didn't have to give me anything. No PayPal, no credit cards, no Black Friday coupon codes, nothing. It's just simply roll your sleeves up, do the work, submit to the process, and wait until the results come. And don't take anybody's advice about not doing it. Because these people, they can't do what we're doing. They have no idea what they're doing. They're doing trades. They're not using stop losses. They're over leveraging. They're trying to make money, forcing things in the marketplace, looking at things that don't exist in an algorithm, harmonic patterns, animal patterns, Elliott wave. Those things are not algorithmic. No matter how many times someone says they are, they're not. So I tossed this out there. I asked the young man for his permission if I could do this. And to me, I think as a mentor, I'm encouraged because it's just really nice to be a part of it. And I'm not trying to say I had, anything beyond the fact that I taught the concepts and he put all the work into it. And I had a very, very small role in that. And any accolades he gets from what he's doing, they're his. He earned them. And I think it's just a wonderful thing to see a young man like this. And it makes me think of myself when I first came up. And I'm quite certain if you listen to his interview on The Funded Trader, I left a comment on that video. Some of you probably see where I post comments because you're subscribed and you get all notifications. But he has a little bit of a storyline that he talks about his family and such, and how his parents want him to go to college and things. And I hope he continues to do well before his parents find out that I was a catalyst for him not wanting to pursue a lot of that academic thing. But moms and dads out there, if you're listening and you see your children do very well, just know that I've always felt strongly about this. And I know that there's a lot of family elements all around the world that have a high opinion of universities and college degrees and such. I'm just simply not a proponent of that. So I believe the young man has done well so far. And if he doesn't lose control of himself and he just stays focused, the sky is not the limit. So, Paladin, I'm very proud of you. And I'm actively looking forward to seeing what you do going forward. Hopefully you found this insightful and encouraging. Until next time, be safe.